All right, welcome to the deep dive. Ready to uncover some stocks that might just double your money?
Always ready for a good treasure hunt.
Well, we're diving headfirst into this Motley Fool article from today, November 15th, 2024.
Fresh insights. I like it.
And you know, these Motley Fool guys, they've been around since '93, guiding millions of investors.
Yeah, they've definitely had a good track record.
So let's see what they've got for us today.
You know what makes this even more interesting? The market's been on a tear lately.
Oh yeah, tell me more.
The S&P 500, it's been a bull market pretty much all year, heading towards a 25% gain.
Wow, 25%. That's on top of a 24% jump last year.
Exactly. Things are looking pretty green.
So does that mean it's too late to get in on the action?
Not necessarily. This kind of momentum, it actually creates a really good environment for growth stocks.
So they thrive in these conditions.
They do. They really do.
So we're looking for companies that could outperform in the long run.
Exactly. Long-term growth potential. That's the name of the game.
And the Motley Fool article, they've highlighted two companies that they think could double in value.
Let's hear them.
They are Alphabet, the parent company of Google, and SoundHound AI.
Interesting. One's a household name and one, well, maybe not so much.
Yeah, you got that right. Let's start with Alphabet, though.
All right. Sounds good.
I mean, Google search is practically part of our daily lives now.
It really is. You use it. I use it. Everybody uses it.
Exactly.
And you know what? They've got about 90% of the global market share for search. That's huge.
No kidding. So all those searches, they translate into big advertising dollars.
Oh, yeah. That's their bread and butter. And it fuels their really consistent earnings growth.
So they're already a powerhouse. But here's what I find fascinating.
What's that?
The article suggests that Alphabet might actually be undervalued right now.
Really?
Yeah, they're trading at a price-to-earnings ratio, or PE, of 24.
Okay, and for those who might not be familiar with PE ratios.
Yeah, what does that actually tell us?
Well, it basically shows you how much investors are willing to pay for every dollar of a company's earnings.
So a PE of 24 means?
It means investors are paying $24 for every dollar of Alphabet's earnings.
Okay, got it.
And to put that into perspective, a competitor like Amazon, they've got a higher PE.
Even though Alphabet is expected to have double-digit earnings growth every year for the next 5 years.
Yeah, it's pretty impressive.
So even if their stock price doubled, their PE would still be pretty reasonable.
Yeah, that's a really good point, especially considering how much they're expected to grow.
But, you know, Alphabet, they're not just sitting on their search dominance.
What else are they up to?
Google Cloud, that's another piece of the puzzle.
Oh, yeah, they're making big moves there.
They just hit a major milestone. Google Cloud surpassed $10 billion in quarterly revenue.
Wow, that's not all.
And get this, they also reached $1 billion in quarterly operating profit.
Things are looking up for them.
And those numbers have even gone up since then. Now it's over $11 billion in revenue and almost $2 billion in operating profit.
Really? That's even more impressive.
Yeah, so they're expanding into this booming sector, cloud computing, all while maintaining their lead in search. It's a pretty powerful combination.
It is. But now I'm curious about this other company, SoundHound AI. What makes them stand out?
They're doing some seriously cool stuff with AI and voice technology.
Like what?
Their platform, it can directly translate speech into meaning. No need to convert it to text first.
Oh, so they're skipping that whole text step.
Exactly. Most voice assistants, they rely on converting voice to text and then figuring out what the text means.
I see.
But SoundHound, they're cutting out the middleman.
That's a pretty clever approach.
It is. And they've got over 200 patents backing up their tech, so it's not easy to copy.
Well, that's good for them. That gives them a real advantage.
It does. And they're not just playing around in a lab either. They're already using their tech in the real world.
Oh, yeah. Where are they applying it?
They're focused on the automotive and restaurant industries right now.
Interesting. Makes sense. Both areas where voice commands would be super useful.
And they've got plans to move into finance and healthcare, too.
Wow, so they're aiming for a pretty big market.
Yeah, we're talking a total addressable market of about $140 billion.
$140 billion? That's huge.
It is. The potential is there. So they've got the tech, they're targeting these high-growth industries, and they've got this massive potential market.
What about their growth? Are they actually seeing results?
Oh, yeah, they are. Last quarter, they saw an 89% increase in revenue.
89%. That's insane.
And you know what? They even revised their revenue guidance upward for the rest of the year.
Sounds like they're exceeding expectations.
They are, and they're also getting more diverse in their customer base, which is always a good sign for any company.
Yeah, spreading the risk makes a lot of sense.
And they're not just standing still. They actually just acquired Amelia.
Amelia?
She's a Well, not as she's actually. Amelia is a leader in conversational AI.
Ah, so they're making strategic acquisitions too.
This move, it's going to help them expand into new sectors. Healthcare, finance, insurance, you name it.
Okay, so we've got Alphabet, the established giant, and SoundHound AI, the up-and-comer.
Both with exciting possibilities.
But let's not forget, every investment comes with risks. We need to do our due diligence.
Right. We can't just get swept up in all the excitement.
Exactly.
We need to understand the potential downsides before we even think about the rewards.
That's how you make smart decisions.
In the Motley Fool article, they do mention that both companies face challenges.
Well, there's no such thing as a perfect investment.
True enough.
So, before we jump the gun, let's take a closer look at those risks.
Let's do it. The more we know, the better decisions we can make, right?
Absolutely. Informed investors are smart investors.
And in part 2 of this deep dive, we're going to put on our detective hats and really examine those risks in detail.
I'll grab my magnifying glass.
Sounds good. Knowing the potential pitfalls, it's just as important as understanding the rewards, so stay tuned.
Can't wait. All right, welcome back to the deep dive.
So, ready to dive into those risks?
Let's do it. We've got these two companies, both with amazing potential.
But every rose has its thorns, right?
Exactly. And even for a giant like Alphabet, competition, it never sleeps.
Oh, yeah. I mean, they're dominant in search, but is that dominance really unbreakable?
Well, think about it. You've got Microsoft and their revamped Bing.
Right. And Bing's powered by AI now, too.
Exactly. So they're a real contender.
So what does that mean for Alphabet? Can they really afford to just sit back and relax?
Definitely not. They've got to keep innovating, keep evolving, stay ahead of the curve.
What if someone comes up with a better search engine?
Well, that's the risk, right?
Yeah.
If people start preferring a different search engine, Alphabet's market share could take a hit.
And that would hurt their bottom line, for sure.
Yeah, investors wouldn't be happy.
So competition, it's a real threat, even for the big guys. Now, what about Google Cloud? They're growing like crazy, but are there any cracks in their armor?
Well, remember, the cloud computing market, it's tough, it's competitive. You've got Amazon Web Services, AWS.
Right, and Microsoft Azure, too.
They're the heavy hitters, already established with huge market shares.
So Google Cloud is playing catch-up.
In a way, yeah, even though they're growing fast, they're still behind.
So the risk is they might not be able to keep up this crazy pace of growth, right?
Yeah, and you also have to think about, what if some new technology comes along and changes the game completely?
That's always a possibility in the tech world.
Oh, yeah, the cloud landscape, it's always changing. Got to stay ahead of the curve.
Okay, let's switch gears and talk about SoundHound AI.
All right, the up-and-comer.
They're still pretty young, still in those early growth stages, lots of potential, but maybe more risks.
Yeah, there are definitely some key risks investors should be aware of.
Like what?
Well, one of the big ones is they're not profitable yet.
So they're still in the red.
Yeah, they're spending a lot on R&D, expanding their operations, building everything up.
So for investors, it's a bit of a gamble, right? Betting on their future success.
Exactly. There's no guarantee that those profits will actually materialize.
And what about competition? I mean, the AI field is exploding right now.
You said it. It's a hot space, tons of investment, tons of talent.
So SoundHound really needs to stay ahead of the game.
They do. If they fall behind, it could hurt them.
Hurt them how?
Well, they could lose ground to competitors. They could miss out on important partnerships. They might even struggle to find and keep the best people.
So staying competitive in AI, it's not just about success, it's about survival.
Pretty much, yeah.
So competition is a big risk factor for both these companies.
It's a common thread, that's for sure.
Any other risks we should be thinking about?
Well, for SoundHound specifically, there's also the issue of their revenue stream.
What do you mean?
Right now, they're relying heavily on just a couple of industries, mainly automotive and restaurants.
So if those industries take a hit,
SoundHound could feel the pain.
that's why diversification is so important.
It is. Spreading the risk across different industries can make a company more resilient.
Okay, and here's a risk that could affect both Alphabet and SoundHound. Regulation.
Ah, yes. The government always wants to get involved.
Well, they're trying to figure out how to regulate AI, which is understandable. It's a powerful technology.
It is, and new laws, they could really shake things up for both companies.
It's tricky because regulation can help innovation or hinder it.
It really depends on how it's done.
So Alphabet and SoundHound, they've got to be careful how they navigate this evolving regulatory landscape.
Absolutely. Too much regulation could stifle their growth. but too little could lead to problems down the road.
It's a balancing act, that's for sure.
And let's not forget about the big picture, the economy.
Right, that's always a factor.
If we have a global recession or even just a downturn in certain sectors, it could impact both companies.
Even if they're doing everything else right?
Exactly. The economy, it's the ultimate wild card.
So we've got competition, profitability concerns for SoundHound, market concentration, regulation, economic uncertainty.
It sounds pretty daunting when you lay it all out like that.
It does. So is there any hope for us investors?
Well, you have to remember, investing always involves risk. There's no way around it.
So it's all about managing that risk, right?
Exactly. It's about understanding the risks, knowing their potential impact, and then deciding if the potential rewards outweigh those risks.
So informed decision-making, that's the key.
And that's really the whole point of this deep dive, right? Giving you the knowledge you need to make smart investment choices.
Exactly. We're not just telling you what to think.
We're encouraging you to think for yourself, to draw your own conclusions.
And in the final part of our deep dive, we're going to give you the most powerful tool in your investment toolkit: due diligence.
Time to really get down to business.
That's right. We're going to show you how to become a financial detective, how to really dig deep and understand a company before you invest.
Sounds good to me.
All right, welcome back to the deep dive. We've explored the incredible potential of Alphabet and SoundHound AI, uncovered some risks.
And now it's time for the fun part.
The fun part.
Due diligence. It's like your detective kit for investing.
I like that. So we're putting on our Sherlock Holmes hats.
Exactly. Due diligence, it's about going beyond the headlines, peeling back the layers, really getting to know a company inside and out.
Sounds intense.
It can be, but it's worth it. So where do we start?
Yeah, that's a good question. It can be pretty overwhelming.
Well, a great place to start is the company's financial statements. Those are like the blueprint of their financial health.
Okay, so we're talking about things like revenue, profits, expenses, all that good stuff.
Exactly. You want to see how the engine's running.
So what should we be looking for in those statements?
Well, first, look for trends. Are their revenues growing consistently? Are their profit margins expanding?
That sounds like a good sign.
It is. It shows that the business is healthy and growing.
Financial statements, they can be pretty dense, though.
They can be, yeah. But you don't need to be an accountant to understand the basics.
Any tips for us non-accountants?
Focus on the key metrics: revenue growth, profit margins, debt levels. And remember, there are tons of resources online that can help you understand financial analysis.
Okay, so we've scrutinized the financials. What's next?
The management team.
The people at the helm.
Exactly. Experienced and capable leadership, it's crucial for any company.
Especially in fast-moving industries like tech and AI.
Oh, absolutely. So do your research. Look into the CEO, the CFO, other key executives.
What kind of things should we be looking for?
Their backgrounds, their experience, their track records. A strong, trustworthy leadership team can really boost investor confidence.
And a shaky leadership team should be a red flag.
Big red flag. If they've got a history of bad decisions or a lack of transparency, that's a sign to be very cautious.
Okay, so we've checked out the financials, we've vetted the management team. What's next on our due diligence checklist?
Now it's time to zoom out a bit and look at the competitive landscape.
Remember, competition. It's a huge factor for both Alphabet and SoundHound AI.
It's a jungle out there.
Right, companies constantly battling it out for market share.
Exactly. So you need to know who they're up against. Research their main competitors, their products or services, their market share, their strengths and weaknesses.
So how does the company we're considering stack up against all that?
That's the key question. Do they have a competitive edge? Are they innovating and adapting? Can they hold their own in that jungle?
If they're falling behind or not keeping up with industry trends, that's a problem.
Huge problem. You need to assess their ability to compete over the long term.
Okay, so we've analyzed the financials, we've assessed the management team, we've scoped out the competition. Anything else?
One more crucial thing: the regulatory landscape.
Yes, those government regulations we talked about.
Remember, governments around the world are still figuring out how to regulate AI, and new laws could have a big impact.
It's a moving target.
It is. So research any existing or proposed regulations that could affect the company.
What should we be looking for specifically?
Well, think about things like, could these regulations affect the company's operations? Could they impact their profitability? Could they hinder their growth? And are they well positioned to comply with these new rules?
It's a lot to consider.
It is, but it's all part of being an informed investor.
Wow. Due diligence, it's definitely more than just looking at a stock price.
It's a whole process, a really essential one. And, it's not about eliminating risks entirely because that's impossible.
So what's the goal then?
The goal is to understand the risks, weigh them against the potential rewards, and then make an informed decision, one that aligns with your investment goals and your risk tolerance.
So as we wrap up our deep dive into Alphabet and SoundHound AI, what's the key takeaway for our listeners?
The key takeaway is you have the power to make informed decisions. We've given you the knowledge, the insights, the tools. Now it's up to you to use them.
So do your research, explore, analyze, and make the choices that feel right for you.
Exactly. Investing is a journey, not a race. And every informed decision you make brings you one step closer to reaching your financial goals.
Before we go, one last thought to ponder. The tech world. It's constantly evolving.
Always changing.
So what new trends, what new innovations could shake things up for Alphabet and SoundHound?
What could disrupt their industries, create new opportunities, or maybe even new challenges? That's the question to keep in mind.
It is, because the answer to that question might just hold the key to future investment success.
Until next time, keep exploring, keep learning, and keep diving deep.